Next, from Springfield, we attend a press conference in which representatives of the Center for Tax and Budget Accountability and the Illinois Taxpayers Federation discuss their joint report calling for Illinois to expand the sales tax base to include consumer services. This runs about 30 minutes.
And with me up here is Ralph Martire, Executive Director of the Center for Tax and Budget Accountability, and of course, birthday girl and State Senator Toy Hutchinson. For those of you who know our organizations, you might be a little surprised to see Ralph and I up here on the stage at the same time, let alone having jointly produced a report. But that's exactly what we've done. And it's because there's certain parts of tax policy that we agree on, and this is one of them. And in fact, we agree on most parts of tax policy. And we think it's really important to start talking about, when we are talking about taxes, how to modernize our state's tax code, how to keep it current with what other states are doing, and to keep up with our modern economy. And so that's what we've done with this report. We're talking about not a brand new service tax, not something new, simply expanding the base of our current sales tax structure to include consumer services. And Ralph's got some pictures here and is going to talk a little bit more about some of the policy things and some of the data behind supporting our arguments. But I just wanted to get up here and just sort of say the point of the report and the point of what we're talking about jointly here together is not how much revenue do we need, although we estimate how much we could receive as a result of taxing services through this. I think that Ralph and the Senator both maybe have stronger opinions. Our organization tends to be a little agnostic on exactly how big the state's revenue buckets should be. We focus more on once you've decided that, once the policymakers have decided how much revenue we need as a state and how much we want to spend on our public services, how do you get there? And good tax policy says broad-based, low-rate taxes are the best way to do that, and taxing, including consumer services in that tax base, is the way to get there. I don't know whether you want to go next or whether Ralph wants to go, or how we want to go. Proceed.
Why don't I run through some of the bases of the report and then you hit the home run and close. I think that Toy is a fantastic closer, Senator. So I brought some visual aids only because I want to prevent people from staring at my face. But we did collaborate with the Taxpayers Federation on this report, and we did collaborate for one essential reason. If you look at tax policy in Illinois, you can see that the fact that it is so flawed has contributed significantly to the state's current fiscal woes. And so hopefully, as the discussion moves forward in Illinois on a way to create a more sound system that could actually work in a modern economy, they'll put initiatives on the table that are straight out of the textbooks, that specifically give guidance on how tax policy has to be structured to work in a modern economy. So the starting point for looking at the structure of tax policy is pretty simple. You look at the four basic principles of what a tax system should be to work from an economic standpoint. It has to be fair to taxpayers, and hopefully that's not a very controversial subject, right? You measure fairness both vertically and horizontally. Two taxpayers that have similar incomes need similar tax burdens, and when you look across levels, you want to distribute tax burden fairly. Your tax system should respond to the modern economy. Your tax system should generate stable revenue, and this is crucial for the sales tax, even during poor economic cycles. Why? Financing the public sector is very different from financing the private sector. In the public sector, when you have a recession and generally revenues decline, demand for your services are going up. The private sector never confronts that reality. In the private sector, when there's growing demand for the products or services a business sells, there's growing revenue to meet that demand. People are buying more what they're selling. The public sector is very different. When revenues are generally down in these volatile and poor economic times, demand is up. So you really have to have a stable revenue source to reduce volatility in your tax collection. And then finally, you want an efficient tax structure, one that works in a way that it doesn't distort private sector decisions. Well, if you look at these principles of economic tax policy, Illinois is 0 for 4. We don't satisfy any of them. It's one of the reasons we have problems. Now, no one tax hits each of these principles. In fact, certain taxes only enhance your fairness. Certain taxes only enhance responsiveness. Certain taxes only enhance stability and are very unfair. But the bottom line is you have to create a revenue mix using your tax policy that'll work in a modern economy. The sales tax function is to bring stability to your system. Now, the way you will get that is if you have a broad base for your sales tax that applies to most consumer services. And here's why that's somewhat stabilizing. First, look at the economy. The economy is what? It's consumer spending. 68 to 70% of all economic activity at the state or the federal level are basically individuals buying junk and such in the local consumer economy. And if you broadly tax what consumers are really buying in the consumer economy, what you will see is stable revenue even during a recession. Why do I say that? Well, 68 to 70% of all economic activity is this consumer spending piece, and consumer spending does not decline significantly even during a recession. In fact, you look at the Great Recession, consumer spending only declined by 0.6% over the entire Great Recession. So if the state of Illinois were broadly taxing those products and services that consumers are really purchasing in the consumer economy, it would have a stable revenue source to help it fund core services even during down economic cycles. Well, 45 states in America have a sales tax. And as you can see, well, this is the percent of the economy represented by services. I'm sorry, I jumped ahead. No. So if you could see, right now in 2012, services represent 72% of all economic activity in Illinois. This is Illinois-specific data. Products only represent 17%. The Illinois sales tax applies pretty much just to the sale of products, and it misses services. And this is one of the real reasons why our sales tax doesn't function and frankly doesn't comport with the modern economy. One interesting trend that goes along with this trend is you look at household consumption patterns. Today in Illinois, the majority of household purchases are not products. The majority of household services are now, purchases are now services. So net, you have to do that. You have to tax services, but Illinois doesn't. So this is the number of services industries taxed under the general sales tax by our neighboring states. You could say Illinois only taxes 5. By far and away the lowest in the Midwest. In fact, of the 45 states in America with a broad general sales tax, we rank 45th in the number of services taxed, literally at the very, very bottom. That's the most narrow sales tax base in the nation, and that means our sales tax doesn't have this stability function. It doesn't reduce the volatility of revenue collection at the state level and contributes significantly to the growth and the structural imbalance between service cost growth over time and revenue growth over time. This shows you the difference in volatility between what a broad-based sales tax generates and what our sales tax generates, comparing Illinois to Wisconsin. Note that during the 2 recessionary periods, both the minor recession at the beginning of George W. Bush's administration and the much deeper Great Recession, Wisconsin, represented by the blue bar, had very stable revenue generation from its sales tax. Why? They have one of the broadest bases in the nation for their sales tax. Look at the results from the Illinois sales tax, jumping up and down, up and down. You never want to see a sales tax graphic look like that, look that volatile. And the only reason ours looks that volatile is because we have this narrow base that ignores the vast majority of the current economy and current consumption patterns by households. I think it's interesting to note that over the course of time, the transfer in the modern economy has been so significant from the sale of products to the sale of services that today the value of our sales tax, as far as what it hits in our economy, has been reduced by over 50% from where it was in 1965. And that's because we haven't adjusted our sales tax to reflect what's actually happening in the modern economy. That's a loser game, and it does create long-term fiscal problems that are significant. Now, our report, and Carol will agree with me wholeheartedly here, focuses on an expansion of the sales tax base to consumer services, not business-to-business services, not healthcare services, not professional services. Why? Well, if you're designing a sound tax system, you want your sales tax piece to apply to that final economic transaction, between the retailer and the end user of the product or service. You do not want to tax every item of the distribution chain as the development of a product or a service flows through the economy. That results in double, triple, quadruple taxation, something tax policy people call pyramiding, putting one tax on another. It's not transparent, it's inefficient, it's highly costly, and it distorts the price of products and services that move through your economy. Here's an example of what pyramiding would look like in Illinois if we literally taxed business-to-business transactions with our sales tax. You notice tax from one to the other, to the other, to the other. So in our current proposal, we wouldn't tax any of these business-to-business transactions. We would leave those out of the sales tax base, and we would focus only on that final sale by the retailer down to the end user. As the product grows in, or service grows in value over time, this would result in a net tax of about $20 under this scenario. If instead we taxed every one of those concrete transactions from business to business before it got to the end user, the ultimate tax would be over $62, or more than 3 times what the current tax is. The end user would end up paying, if not all, the vast majority of that tax as business passed it on and on and on, but it would look like the price of the good or the service. It would be very non-transparent. So you end up with a very regressive and high tax for the end user to pay, and a very distorted and inefficient business process. So we do not support expanding the sales tax base to business services. In fact, both of our organizations testified against the gross receipts tax when it was proposed by Governor Blagojevich a few years ago. Yes, it would have raised needed revenue for the state, but would have raised it in the wrong way. And if you're going to modify tax policy, and you're going to modify it significantly, and you're going to generate new revenue, do it the right way so you don't harm your economy. I think that that's the basic message we want to make. So at the end of the day, what would this generate? And I know there's a couple of different ways to look at expanding the base from a tax policy standpoint. For instance, we could in Illinois, at the decision maker level, decide that we want to take the expansion of the base and use some of the revenue that's being generated from an expansion of the base to cut the sales tax rate. It's a rational thing to do, may not be the thing for Illinois to do for a couple of reasons. Our current state rate right now is 5%, which is below the national average of 5.5%, number one. And number two, you may not have noticed, but we actually have some pretty significant revenue problems at the state level. Now, the other thing that they could do with the sales tax when they expand the base is simply let it expand out, hit services, and generate some tax revenue. And what will that bring in the door? Well, based on estimates from the Commission on Government Forecasting and Accountability, about $2 to $2.1 billion in new revenue. If you look at the state of Illinois' current fiscal condition, and you look at our significant revenue shortfall at the state level, I can only assume that in addition to having the spending side of the ledger on the table, the revenue side of the ledger is going to be on the table. And if that's the case, then this, the sales tax base expansion, should absolutely be core to the discussion. It will simultaneously modernize our tax system, help keep our rate low, and generate stable revenue during poor economic cycles that'll be there even when we're in recessionary periods when demand goes up and other revenue sources decline. It is absolutely crucial to making our tax system work in the modern economy, and hopefully it will be core to whatever final grand bargain gets developed among decision makers as they fight through this difficult budget cycle. And with that, I would like to turn it over to the Chair of Senate Revenue, Senator Toy Hutchinson, for her thoughts.
Good morning. Thank you guys for coming. The reason I wanted to come down and hear this report is because we are in a crisis in the state of Illinois right now. And never let it be said that a crisis isn't the perfect opportunity for solving some very significant problems. And in my mind, considering the fact that a major overhaul of Illinois' tax code hasn't happened since 1970, this is the perfect time for us to get this right, because it won't happen again for decades and decades and decades. So we here in the Capitol, they're lawmakers that always struggle with conversations about taxes, always. It's a very pocketbook issue. It hits you at home where you feel it the most. And it's a difficult conversation to have when people know that they are concerned about how much money is going out and whether or not the government is using it efficiently when it comes here. That's why this conversation is so critical, that we take the partisan lens off and actually deal with real economic data, research-based, peer-reviewed data, so that we can make better decisions for Illinois going forward. As you all know, I'm in leadership. I'm rank and file. I chair the Senate Revenue Committee. But I've really attempted over the last few years to study as much as I possibly can, because I do feel like that's our job here in the Capitol. And at this moment in time, at this moment when we're dealing with the biggest fiscal crisis we've seen in a generation, at this moment in time, it's time for us to get serious about making policy decisions that are not about the next election, because it's really about the next generation. This is about modernizing a tax code, reforming a tax code that's not built for 2015. This is a tax code that's built for 1970. Our economy doesn't look that way anymore. It doesn't operate that way anymore. And because of that, we have structural deficiencies in our entire code that will continue to allow us to careen from crisis to crisis to crisis if we don't get serious about understanding exactly why we are where we are, so we can attempt to fix why we are where we are. Those are hard conversations, and they require people to come into the room, sometimes being willing to listen to other points of view and talking to people who don't agree on anything, and people who, frankly, have spent the last 30 or 40 years only talking about taxes in a way that they're just bad. Not really talking about it from an academic standpoint or from a research-based standpoint, so that we can make better decisions. This is a moment in time that we have right now that I'm very, very afraid will waste if all pieces of the conversation are not on the table, and if we don't come to the table while we're negotiating these very significant policy things with an understanding of the fact that the goal here is transparency, efficiency, and stability. Illinois needs that desperately, now more than ever. So I'm grateful that you all came. I'm sure on the technical pieces, these two brilliant minds next to me would be happy to answer any questions. If I can fill in any of the blanks as to the process that's happening in the building, I'd be happy to do that. But my overarching message that I like to get out is that this is big, it's complicated, and it can be very complex. And since most people don't like to dig in the weeds as to why that is, I'm happy that there are folks out there that are putting out reports. We have the Center for Tax and Budget Accountability. We had another report done by Illinois Voices for Children. TFI, in the collaboration with the CTBA on this. The Civic Federation has also issued a report that says a lot of the same, that makes a lot of the same points. So at the end of the day, if we could just get to the point where we really stop talking about how bad it is right now and think about where we want to be in 5 years and 10 years and 15 years, this is an opportunity for us to do it right for a change. So thank you all for coming, and we'd be happy to take questions.
Yes, sir.
I have a question for the Senator, actually. You talked about those people who demonize taxes. Do you think there's any support for services revenue change amongst Senate Republicans or House Republicans?
I think the key word across the parties, and across both chambers and across the parties, is modernization and revamping the tax code to make sure that it matches the economy that we have. Even though we are going to have some pretty intense debates and discussions about rates and where we end up on that, I think there's broad agreement about the fact that we have an old, antiquated tax code that simply doesn't work for the economy we have today. Most people would agree when you say that, no matter who you talk to.
Governor Rauner did suggest as a candidate that he would be open to expanding the sales tax base to services, and he's reiterated that stance since. So you would assume that at least at the very high and executive level in the Republican Party would be interest in exploring this option.
And I would also note that the research that's coming out now, the research, all these reports that I mentioned before, you have TFI, Illinois Voices for Children, CTBA, the Civic Federation. These are organizations that really span a broad spectrum of where you are on the political spectrum. And they're all saying largely some of the same things. So with that, I'm hopeful that just as this press conference itself is indicative, that these two organizations could come together and collaborate on a report and find areas of agreement, it is time for us to figure out where that sweet spot is so that we can move the state forward. This is a critical time, and it's going to, at a certain level, it is going to require folks to step up to the plate and rise to the occasion to do this, because these are not easy conversations by a long shot. But I try to tell people when I go back, to the district, when I'm talking to people, in their homes, I get it. I'm nervous about this too. I pay taxes too. My kids are about to go off to college too. And these are scary times for all of us, unless we concentrate on what comes next instead of getting hung up on what's so bad right now. We have an opportunity.
Mention these four principles of
Tax
four
policy.
principles that you are looking at here in this report. For the sales tax in particular, which of these principles does that hit and which does it miss?
Yeah, well, very clearly what it hits is stability and reduces volatility, as a number of the slides I presented in poster board form show. And that's its primary function, to generate stable revenue even during poor economic cycles. What it doesn't do is tax people fairly. In fact, it always takes a greater percentage of income from a low and moderate income family's budget than it does from a more affluent family, because it's the same sales tax no matter how much you earn. So if it's a 5% sales tax on the purchase of a haircut, and the haircut is the same price, a person making $1 million pays the same dollar amount of tax as someone making $10,000, right? So it's a relatively regressive way to tax. That said, taxing services is far less regressive than our current sales tax policy, which focuses only on the sale of products, and here's why. The low to middle income family that has a lawn to take care of will purchase a lawnmower and pay a sales tax on the purchase of that product. The more affluent family in Barrington will get a lawn service to care for their lawn and pay no sales tax on that service. And in fact, when you look at household consumption patterns, what you see is upper income households consume more services than do low and moderate income households. So it's less regressive than our current policy. And there are easy ways to offset the regressivity of a sales tax base expansion. One of the most facile ways to deal with that problem, and one that has enjoyed broad bipartisan support over the years, is the Earned Income Tax Credit, the EITC. This is a credit that's given through the income tax side of the ledger to low to lower moderate income families, and it works very simply. Say in Illinois you have $100 in income tax liability, but you qualify for an EITC of $200. Well, you don't pay the 100 in income tax liability because your credit is greater than that, and you get a check back for the balance, the $100 left over in your credit. That offsets the sales taxes, the excise taxes, the property taxes, the other taxes you pay, and it offsets them in a very efficient fashion directly through the income tax code. This has enjoyed such bipartisan support over the years that, interestingly, at the federal level, it was first proposed by Richard Nixon in his administration. It was most greatly expanded under Ronald Reagan, who described the EITC as the single best pro-job, pro-family, anti-poverty legislation Congress ever passed. So this is the kind of way you put together a tax code to work. We absolutely need our tax system to reflect the modern economy. And we have to have this expansion of the sales tax base to consumer services, or it won't, and we'll continue to have fiscal problems into the future. That said, we could still make the system a little more fair by simply adjusting our state EITC, increasing it, and providing more relief, very specifically targeted to low and moderate income families.
Do you have any estimates about how much money this would actually bring in?
$2.1 billion. I threw
That's the amount that would go to the state. The 5%, or what people usually call the state rate, is 6.25. Only 5 of that goes to the states. The 2.1 billion is the state piece. Our local taxes, the many local jurisdictions get not only the 1.25, but also additional more. And so I think another 500 million or so, I think, is what we ended up
for local
guessing.
governments.
It's an estimate on top of a guess on top of an extrapolation, because we don't know, because those services in Illinois have not been taxed before. But some very smart people at COGFA did some work on this a few years back, and that's the best estimate out there. We've updated it to reflect today's dollars, and that's where we came up with those numbers.
Yeah, a simple back-of-the-envelope analysis. You know, the city of Chicago, you may have heard, has some relatively significant fiscal problems facing it. It's currently looking at a pension funding ramp cost this year-to-year growth of $550 million, and it already has an accumulated deficit in its corporate fund. For the city of Chicago, this would mean $300 million roughly, which goes a long way to helping them make ends meet. And once again, matches the modern economy, and it treats businesses, you know, more fairly, actually.
As the senator said, it's complicated. The city does tax some services through separate taxes, so we'd have to, you know, this isn't something you can run upstairs, quick draft a bill and pass it tomorrow and save money the next week.
Although Carol and I are willing to go do that.
But you know, negotiating that all those complicated things in our state and the local tax structure that will be necessary to noodle it through. But it is good policy, and it's the right thing to do.
And really, long-term, the state of Illinois can't resolve its fiscal problems unless it looks at its tax policy and ensures it's designed to work in a modern economy. I mean, right now, one of our significant problems is very simple. Revenue growth will not keep up with service cost growth, even if you don't add a program or expand a program, because our costs at a minimum grow with inflation and our revenues don't, and our revenues don't because we're missing a modern economy. This is not ideological. This is something that Carol and I both refer to as math. This is just how the numbers work, and if you have the math wrong, your revenue system simply won't work.
Do you have any contact with the governor or his staff on this, or do they just consider you kind of the lefty group or the union?
Well, notice that I'm standing here with the Taxpayers Federation of Illinois, which people can categorize a lot of different ways, but
Probably not
lefty
as a
is
lefty
probably not one of them. And
Don't you see the magic of what's happening right here? That's why we're here.
And Bernie, really, that's the point. And
I'm late.
no, it's okay. People try to make that characterization all the time, and it always makes me smile. I mean, yes, my organization receives funding from unions. We also receive funding from foundations, and we receive funding from businesses, and none of them get to tell us what to conclude. And in fact, I have publicly testified against the union position on different pieces of core policy, including tax policy, well over 30 times. The gross receipts tax, which we mentioned here, was supported by every union that funds me. And I testified strongly opposed because it was bad tax policy. So, I mean, at the end of the day, what Carol and I are trying to do here is say, look, worldview is irrelevant when you're looking at things like fiscal policy. There are textbooks that tell you the right and wrong way to do it. Illinois does it the wrong way. And if you keep doing things the wrong way for generations, your tax policy won't work, your revenue generation won't sustain investments in core services, that'll generate deficits, and it will encourage relatively irresponsible fiscal practices like, I don't know, borrowing against what you owe the pensions to fund current services, for instance.
Okay, so let me put a final point on this, because that question goes to what I was saying a little bit earlier, that there has to be some point where we can come and have a conversation that's based on data and research and peer-reviewed articles, where we can remove or at least kind of tamp down the partisan lens. At some point, we're going to have to, because we all live in this state. There are all kinds of different constituencies that need this government to run properly, that need us to right the ship, that need us to not have so much volatility in our economic system, and that need us to be able to be transparent, to be efficient, and to be stable coming forward. One of the biggest factors that goes towards outward migration right now is that we are so volatile economically. And when we can pull the layers of the onion back, which requires folks to, again, right now when I go in those rooms, you know, at some point, yes, there's a party system here. And there are real problems that Illinois has. I don't know about you all, but I'm tired of careening from crisis to crisis. And so are our constituents. We have an opportunity now to do something about it.
You're watching the Illinois Channel, an independent nonprofit corporation formed to provide gavel-to-gavel coverage of Illinois state government and other public affairs events taking place across Illinois.